Greetings and good day. I hope you're doing great. I'm here with you for the daily Ethereum analysis on March 6th. We are currently reviewing the weekly time frame. As you can see, in recent weeks, Ethereum's price has closed with bearish candles, but contrary to expectations,
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
This week, after the start of the conflict between Iran and the United States, we witnessed a rise and increase in Ethereum's price. Currently, with more than 7% growth, it is trading around the price range of $2,077. This week, we saw that Ethereum's price went up, reacted to its weekly 50% FVG line around the $2,200 range, and then pulled back downward. The reason for Ethereum's recent upward movement, which was contrary to expectations, can be attributed to the heavy decline over the past few months. We can consider that with this significant drop, the main sellers have exited the market. So, in such circumstances, we can observe that after the heavy drop that occurred at the beginning of February, the price encountered support and formed a trading range. Now, over the past 2 days, for the first time, the price has broken out of this range to the upside, and we have seen an increase up to the $2,200 level. We are currently analyzing the capital inflows and outflows into Ethereum ETFs. As you can see, this week on some days we witnessed capital inflows and on other days capital outflows. However, by averaging these flows, we can consider a positive trend for this week. This, along with the increase of the Fear and Greed Index to 25 and exiting the extreme fear zone, could indicate the return of investor confidence to the crypto market. This is the first time in a month that the index has entered the fear range. We are currently analyzing the 4-hour time frame. This is the time period when news about the start of the war between Iran and the United States was released. In the initial reaction, we witnessed a sharp drop in price. Subsequently, after the 4-hour FVG zone was filled, the price quickly rebounded, and during this trading week, we saw that the price has been setting higher highs and higher lows. This price increase continued up to another 4-hour FVG in the $2,200 range, after which the price reacted to this barrier and pulled back. By analyzing Ethereum's liquidity map, we can make a better prediction about the next price movement. You can see that in the recent price movement, most of the buy-side liquidity has been collected, and currently, there is relatively good liquidity at the price of $2,175. However, near the current price, at the previous lows, we are seeing sell-side liquidity. This liquidity has accumulated around the price levels of $2,050 and $2,030. The main sell-side liquidity will be in the area of $1,911, and given the upward trend that the price has formed, at the moment we do not expect this liquidity to be collected. By examining these areas on the chart, we can see that the main liquidity is lower than the previous low and in the 1-hour FVG area. So as a result, if we intend to enter a trading setup for now, as long as the war and military tensions continue, we can expect this trend to persist, and we should look for buy trading setups. We can consider that in seeking an opportunity, the price may collect the liquidity below its previous low, or even penetrate deeper to gather the liquidity in the 1-hour FVG. And then, with indecisive candles, we may witness the end of this short-term correction. In such situations, we can use various strategies to enter a buy position and aim for ROR ratios of 1-to-1 and 1-to-2. Currently, we are in a situation where conflicting news and war-related news have a significant impact on market movements. So if we enter any trade, we will strictly observe maximum risk and capital management. Wishing you success and profitable trades.